Hey guys, let's have a look at the German DAX, and this video is going to be a bit different than my previous ones because you won't find any formations or patterns you're used to from my older videos. I will talk about cycles only. Cycles are usually for finding the right timing, so they got nothing to do with the price, it's just to determine a proper bottom in the market in various time frames. And I will give you two examples from my daily chart, and the other one is from my weekly. I use two different types of cycles, stationary cycles, and the other ones, they got variance in it. They are a bit more complicated, but I will try to keep it very basic for you. So let's hop into that weekly chart you see here right now. To give you an orientation, this is summer here in 2017. This is our COVID crash, and that is what's happening right now. And you see these half circles here on the bottom, and these are my stationary long-term cycles and DAX. The red one you see is 7.5 months long in its time length, and the other one, the blue one, is 17 weeks, and they are not that accurate. That's why you have to consider a certain tolerance of like plus or minus 3 weeks for the 7.5 month and about plus minus 10 days for the 17 weeks cycle. So let's have a look at that red cycle, because that worked quite well over the last 5 years. When you pay attention to that dotted line and these yellow circles, they always give you the bottom of DAX. And as you can see, we were just here like 2 weeks off, another 2 weeks early here. Here we were running 3 weeks late. Here we were just 2 weeks late. We got the COVID crash quite well. We were just a week early. Here that bottom formed also a bit too early, but it gave us an idea that could be it, and that market is turning to the upside again. This one here is an exception. I will talk about that in a little bit. And the last low we made, we got that week-wise, perfectly. Considering this low over here now, I mean, it doesn't really look like a proper bottom. We only came down like 750 points from that all-time high at 15,800. But that's what happens in bull markets when they are very strong. The pullbacks aren't that intense. The timing was quite well. It was just a week off. That's why I determined this one here as a proper bottom for the new cycle. And what happened then, it turned downwards very early, at a very early stage of that cycle, and we weren't even halfway through, and we made a new low, and that gave us a sign that that whole cycle is going to be bearish. And there might be another all-time high, and that's what happened actually here. And we did like a double top over here. But then is what actually happened with that cycle is it turned bearish, and we formed a bottom in early March. And when we just scroll over now to the right, and I zoom in a little, that circle over here, that red one, which worked fine over the last years, that gives us like an idea where the next pullback or that next correction is heading to, somewhere in end of October. So that might be mid-October or like mid-November. Like, just consider these plus or minus 3 weeks, and there might be also like a little drawdown into summer somewhere in July. And I think when we just have a look at the daily now, that gives us also an idea about July, if I'm right. So let's hop into that daily chart. So this is a daily, and as you can see, there's much more information than in the weekly in here. And I just keep it very simple for you guys. And in black you see that primary cycle which got all these variants in it. So we come to that later on. And we also have two stationary cycles in here. They're a bit shorter than in the weekly. The red one is 11 weeks long plus minus 5 days, and the blue one lasts 6 weeks plus minus 3 days. And the blue one is more or less like an intermediate term cycle, which I rather use if it overlaps with that red one. So it's a combination of these two, and that worked quite well actually when we made that low in March, but lately that blue one also worked quite well on that low and that low we made in December. The 11-week cycle worked out actually pretty well for over a year now. We determined here that low in end of April very nicely. It was a precise hit in July last year, a little bit off here in October, and December was very accurate again of last year. And the latest low we just made in just on the 7th of March, and we just missed that out by 2 days. So that worked out quite well. And while having a look at these two cycles where they meet again, it's that end of May period. So that would be a nice time for an intermediate bottom for Dax. Somewhere around 25th of May all the way up to the 7th of June. It doesn't mean that we take out these lows, or I can't tell you by this chart how far we go to the downside. I just can tell you there is a bottom here. It depends a little bit on that rally. These two tracks I put in here, they're my preferred scenario. So I rather see Dax failing that rally in that red zone here. And if we break through, I don't want to see it really getting over these last highs from end of March. There's a reason behind it, because I consider this one here as a primary bottom, and now we come to this primary cycles. They usually last 15 to 26 weeks, and they consist usually of out of 3 or out of 2 major cycles. They either, if there are 3 of them, they last 5 to 9 weeks, and if there are only 2 of them, they last 9 to 11 weeks. And you count them from bottom to bottom. So this was week 5, so that actually qualifies for a proper bottom of the first major cycle of that primary cycle. And I rather have this whole primary cycle to be bearish than bullish. That's just my theory for now, my understanding of it. So yeah, don't blame me if I'm wrong. So and it depends on that high. As soon as we take, with that new major cycle which started from that low over here, as soon as we take out that high, that whole primary cycle is turning out to be bullish. And then we have to be a bit careful, because then that rally can keep running for days and weeks, and it could turn in very late into that period here, and that pullback might be only just a little bit. So just concern that. And just to talk about primary cycles, to give you a few examples of it. Here, for example, we had a 15-week cycle. It was a bullish one, and it consisted out of 1, 2, 3 major cycles. Here's where the other one started, and this one was a little bit longer. It was 21 weeks. It was also a bullish one, and we had 2 half cycles, one and another one, which just ended pretty much where we started at. And this one here is a very interesting one, because this one was a 22-week primary cycle, and it turned out to be bearish, because we had our first rally up to here, and it ended somewhere here after, I don't know how many weeks, I think week 6 or 7 it was. And then we started to rally again, and we failed to make a new high, a new all-time high in that second period. And that gave us an idea that that thing is turning out to be bearish. I couldn't tell you that we go all the way down here, but there's a very high possibility that we undershoot that starting point, which was here at 14,818, and we did quite late, but in week 22 we formed a bottom, as you know, on the 7th of March, and yeah, that's where we started our new primary cycle. So I hope you're not too confused by the last 3 minutes, because that's where it actually becomes a bit more complicated. I try to Twitter these charts and try to give you some updates on it. So I wish you all the best, and I'm taking most likely off tomorrow, so I might do another video on the weekend or beginning of next week. So yeah, wish you all the best, have a nice weekend, and I see you on Twitter or on YouTube later on. Thanks.